we look at Bitcoin, people love to look at it, watch it, talk about it, trade it. 4,200 earlier in the year. Now it crossed 20,000. What are some of the catalysts? And you are a big fan, right, of Bitcoin?
I am indeed. Thanks for having me, Nicole. 2020 has definitely been a roller coaster ride for Bitcoin. To your point, it started off on shaky grounds amidst coronavirus fears in March. It suffered its second largest daily drawdown in price history. That certainly dissuaded a lot of investors from making that jump. But like the equity markets, we saw a V-shaped recovery. And through the second half of the year, Bitcoin gained major momentum from institutional players. Obviously, starting with macro investor Paul Tudor Jones disclosing an allocation into Bitcoin. Shortly after that, Bitcoin underwent its third successful halving, or a cut in the rate of issuance of newly minted Bitcoin that really strengthened the credibility of its monetary policy. And then you had public companies like Square and MicroStrategy recently announcing investments in Bitcoin on their own balance sheets. Companies like PayPal that are now offering buying and selling Bitcoin. So I think the momentum that we've seen in the second half of 2020, I think, is certainly going to continue into 2021, making this certainly one of the most compelling risk-reward profiles among assets.
Yeah, so as you talk about it being the most compelling monetary asset since gold, when can someone get in on this? I mean, are you a fan of buying in now or sort of doubling down at some point? I mean, the halving occurs every 4 years, right? So that happened already last year. You're not going to see that again for a while, and that's usually a good catalyst. You certainly have PayPal and Square, Grayscale, Paul Tudor Jones, Anthony Scaramucci. There's been a lot going on here. Where do you think it could go? And how important is it to have these really notable names in Bitcoin or supporting Bitcoin?
Sure, that's a great question, Nicole. I think, so we recently published a two-part white paper that explores Bitcoin as an emerging asset and encourages capital allocators to consider the opportunity cost of ignoring Bitcoin as part of a new asset class. Your question of where should investors or when should investors go, it really comes down to looking at this as a strategic allocation and portfolio diversifier, regardless of the price. We've seen year to date, Bitcoin is up 270%, and since its March bottom, up nearly 500%. But what we're really witnessing is a global battle among monetary systems, both sovereign and non-sovereign. And as an open, neutral, and global monetary system with no reliance on modern central banking, Bitcoin is in a great position to win that battle. And if it does, we expect it to be measured in the trillions, more than an order of magnitude higher than its $350 billion market cap today.
We talk about where it could, and I see what you're talking about when the market cap and the growth. So 20,000 is where we are now, basically near record all-time highs of 2017. 40,000, 60,000, 100,000. What are some of the targets that you think are somewhat realistic?
Sure. So we've sized the opportunity, and when you think about its role as perhaps serving as a digital gold or as protection against asset seizure or as a catalyst for currency demonetization, we expect a multi-trillion-dollar market cap within the next 5 to 10 years. Now, how does that translate exactly to price? Well, just to give you a little bit of context, right now, gold is around $9 trillion market cap. Bitcoin is around a $350 billion market cap. If Bitcoin were to capture, call it 10% of gold's market cap or really surpass that $1 trillion market cap, that's a $50,000 Bitcoin price.